Hi, today is Sunday, November 18th, 2018, and we're taking a look at the S&P 500 as we go in for trading into the Thanksgiving holiday for November week 4. Starting with Monday, November 19th, we have options that expire on Monday, we have options that expire on Wednesday the 21st, and then we have options that expire on Friday the 23rd. In looking at where we're at this past week that we just traded, we had, a pretty negative week coming in, following on to, a really negative day on Friday the 9th, where we had the PPI report in the pre-market. We had a 12-point gap down, and we added on about another 30 points to the downside. And then we traded 50 points primarily to the downside, top to bottom on Monday, 40 down on Tuesday, and then 60 points top to bottom down on Wednesday, which was capped off with the CPI report before the open, and we were anticipating a talk by Powell after hours, and he had spoken, about a month earlier and really rolled the markets over with the things that he said in an event after hours then. So the market was sort of just taking this negative ball and running with it from Friday, following through on Monday, Tuesday, and Wednesday. Finally, on Thursday, we did have a single push down in the morning, setting our interim low, but then we rallied back 65 points on up from the low on the day up to the high of the day, and followed through again with a nice upside day, albeit not as wide of a point range as we had on Thursday, but still 35 points top to bottom to top on the day on Friday. So if we're going to follow this pattern of following through for a couple of more days like we did last week, we're going to come into Monday and maybe look at a bullish week with not a lot of stuff going on. Monday, Tuesday, we have the Fed, Williams of the Fed speaking at 10:45, and I suppose that as long as he stays on the new and improved script that we've been getting from the Fed, where they say that they're very data dependent, that they want to get to neutral, but they're very data dependent right now. That seems to be the party line right now. So let's listen to that, and the market will just show us, in and of itself, if they're going to react positively to that. After hours, there's Kuroda from the Bank of Japan speaking after hours on overnight on Monday into Tuesday. Tuesday, we have some housing data, building permits and housing starts before the open, and then durable goods report on Wednesday. Thursday, the market is closed, and Friday is just a half day of trading. The market closes at 1 o'clock Eastern time, and you can trade your non-expiring S&P 500 options up until 1:15 Eastern time. So as long as they're not the ones expiring on Friday, you can trade them. You can trade them on up until 1:15, but then everything's closed after that. So we have a good chance, to follow on to the way the week ended last week, and continue that pattern this week. Starting off looking at the state of the daily chart, this is the gap map. This is the simplified roadmap. Right now we have a couple of gaps right overhead left to fill from that we've left in our wake from after the election, the post-election rally. One right ahead at 27.81, and then one right after that at 28.06. We had a situation coming in this week where it looked like maybe we could get a buy signal going off of the 10 and the 20-day simple moving averages crossing each other. But because of that negativity on Friday, this wound up getting treated as an overbought signal instead of a buy signal. And then in turn, as the week went on, we started getting this death cross overhead of the 50-day crossing down through the 100-day. And in turn, the market sort of diverged and treated this like an oversold signal. So we're kind of getting the market reacting opposite to what we would expect to these simple moving average crosses. On Thursday, we got to close back above the 20-day and follow through on that on Friday. And what we need to see happen early on Monday for this rally to kind of get some legs further underneath it, we need to see the 10-day and the 200-day simple moving averages go down. And looking a little closer at those, we can see that the 10-day simple moving average is at 27.51, and then about 27.60 or so is the 200-day, just above that. All right, and so let's take a look at something on the intraday chart that I think is kind of interesting that I wanted to show you as well. Talking about, I can find it here. What did I do with it? My 5-minute chart. There it is. This is my 5-minute chart. This is like this is just a 5-minute time frame, and I took all of the price levels off of it except for this 27.22 level. This really was a hard level of support and resistance that we really tangled with this week. You can see here's the last week of trade right here. Here was Monday. Okay, so here's Monday, and you can see that as we got down to 27.22, we balanced on it, we chopped around, and then boom, we fell down below it. And then once we regained it, we chopped around, and even still on Friday, we were chopping on it. So what we really want to see is for the market to stop coming back to this 27.22 level, because it really, when you look at the pattern overall over the course of 2 weeks, what do you see? You know, you see a head and shoulders. You know, here is your left shoulder. Here's the head at the failed rally into the election, and after the election, I should say. And then here is the right shoulder. And what we don't want to see, if we're long and we carried options in, we don't want to see an early break in the day of this 27.22 level. We'd like to see price break away from that and go ahead and fill those gaps up overhead. And I wanted to show you something else that was kind of interesting too, that might lead one to think that we really are kind of targeting, maybe even as soon as this week, this 28.06 level, and filling in these gaps so that we can, you know, go into the holiday with these gaps filled, and then we have a fresh slate to start with without any gaps above or below us left in the wake of this activity that happened in late October and early November. If we take a set of Fibonacci retracements and put them right here at the top of this gap, you know, filling this gap up here at 28.06, and we look at our most typical retracement level on this, from this level on back down into, you know, say if we were to come up and fill this gap and then start to fall backwards a little here, 27.21.19 or so ends up being our 61.8 fib on something like this. So that kind of, I think, is intriguing, that if we were to rally, that would be retracing back to this low that we just hit this week. So if we were to go up, fill this gap, and then retrace back a little, we could come back and do a typical sort of 50% to 61.8% retracement of that and still hold above that 27.22 level. And maybe if we can hold that 27.22 level on a retracement back, then we take off and we undo this and void out this head and shoulders pattern. If we rally up, fill this gap, come back down and break that 27.22, chances are, I think, then we're probably going to end up breaking this low and going ahead and fulfilling that head and shoulders pattern, and maybe going on ahead and testing deeper back down towards that 26.03 level rather than stopping here at 26.70 like we did just this past week. I hope that makes sense. If for any reason that doesn't make sense to you, just DM me. But basically what I'm saying is, what I think would happen is that we would continue rallying up. We want to fill this gap, and if we can continue further, getting past 27.80, fulfilling maybe the 80 handle rule here and going on to 2800, maybe we would take a look just above 2800 and fill this gap at 28.06, then kind of peter out, come back and retrace and test that 27.22 level one more time, and then take off. But if 27.22 doesn't hold on the way back down, then we got to go test this and maybe even break down and sort of fulfill that pattern. Let's take a look at some individual stocks, because what really needs to happen too is that we need for this to be a broad-based rally. We need to see, especially like FANG and Boeing, you know, our favorite components of FANG and Boeing to participate in this rally. Here's where we stand on Apple. We've got, you know, 3 closes in a row underneath the 200-day, but they really seemed like they rallied back up above the 200-day on Friday, but closed the week just under it. So what you want to see happen on Monday is for them to open and run up over this 200-day and put in a close above it. And I think that that bodes well for some follow-through overall on the market. When we take a look at Amazon, where is it at? Okay, on Amazon, as far as the simple moving averages and everything go, it's just sitting down here in a cluster, waiting to try and get back above its 10 and its 20 and its 200-day as well. So maybe if we can see a rally kick in early on Monday with Amazon, and we focus on getting past this 1664 to 1665 level, That's going to get it over this resistance point here that you can see where these last two closes, refused to cross that river there at 1664 to 1665. And then we wound up with this whole other leg and this whole other, price area and price acceptance down here below 1600 itself that starts to take place. So we want to see this 1664 to 65 level get taken out, along with that area on Apple taking out its 200-day and moving on. And then you've got a little bit more broader based activity going on. We'll take a look at Google real quick. Oops, not the right symbol. Google. Take a look at Google real quick. And once again, as well, it's sitting here perched right underneath its simple moving averages. Look at this 1040 level. Look at this. There's been 1, 2, 3, 4 days in a row where it just sort of bounced along this 1040 level. So I would think that as long as you're seeing it print above 1040, you know that there's got to be some sort of like invisible hand in there. Maybe this is the corporate buyback going on right in here. Maybe there's a fund in there that's buying at this 1040 level. And we just have to see it early come in and take out these simple moving averages that it's right above. And if you see it move above this 1094 level, this last place where it kind of ran into a lot of resistance here, you can see 1, 2, 3 days of resistance, and then boom, it fell down. It recovered it for a couple of days, but then boom, fell down again. So about 50 to 55 points on top of this 1040 level. So if we see that all taking place, that's good. Another bad thing that's going on though with Google is it's got this death cross going on. So it really does need to get out of the ditch here and rally. Otherwise, this is going to take over and take precedence over anything else that's going on. And then finally, let's take a look at Boeing and what Boeing gives us here as far as what it needs to do. Boeing, it looks like my last analysis of it here, I was looking at 3 higher lows. You had a low in August, another low in October before it reported earnings, or right after it reported earnings, I should say, where it held a higher low, and then it rallied up into its dividend. So here's the mark where it pays a dividend at right around the time of the election, and then it sold off again. But as of Friday, it held a higher low once again. So you've got a set of 1, 2, 3 higher lows. So maybe what we can call this is about 330, 331 or so, as long as it's trading above that. And we want to see it gain back its 200-day simple moving average and close above that up at 349. So we want to see it hold above about 330, and we want to see it regain about 350. And then we know with all those things going on together at once, some good strength in those key components of FANG and Boeing. Yeah, there's a lot of other things in the market that need to go right too. Oil, some of the energy names, some of the pharmaceutical names, and so on and so forth. But for me, I know when I can go to these particular names, 4 or 5 names or so, and when they're all working in concert together, I know that I've got a pretty good broad-based rally going on. And then, let's take a look at that calendar one more time. I want to also tell you that, we've got a nice holiday shortened week, maybe some thin volume, and if we come into the week with a bullish slant, that helps us. Let's be a little cautious on Wednesday towards the end of the day, and if you trade it all on Friday, be cautious about bringing anything home with you to carry into the following week, because when we get to November week 5, our final week for November, yeah, we have our Cyber Monday, but on Wednesday we have the GDP, and guess what? Thursday, after we get back from Thanksgiving, is the Fed minutes, and then we have that G20 meeting that begins that weekend. So we have a nice bullish week this week, and we can get this sucker all the way on up there to that 2806 area. If we're going to have that fall back down to 2722, this seems like it would be a pretty good time to get that done, and have a reason for to see the market be a little bit squishy as we head into these Fed minutes next Thursday, and then the G20 meeting going into the weekend after that. Okay, that's it for the S&P 500 for this weekend. If you have any questions about anything on this video or any options that you're trading, just shoot me a DM, and I'll answer your questions in a timely fashion. Have a good rest of your Sunday. As always, good luck and good trading.